Joined by Shiv Chanani, a senior fund manager, equity, Baroda, BNP Paribas Mutual Fund. Hi Shiv, afternoon and welcome to the show. All right, so a maverick in mid cap, small cap, and consumption. I would say the two market caps where investors are very eager to know what's going to happen next in consumption, which is a theme that a lot of experts and fund managers are betting on, especially in the second half of this current financial year. So, what's your take on these two specific market caps and the consumption theme?
So, hi, good afternoon. And yes, we are clearly excited about all the three themes that you talked about, the mid cap, the small cap, and the consumption part of it. Uh, you know, while you talked about the, second half and things like that, but of course, we look at them more of a structural story. If you think about India from the next 5 years, 10 years perspective, there is no reason why all these themes shouldn't deliver very handsome returns to the investors. From a pure fact that India being, one of the largest and the best growth economy when you consider most of the major economies, and the demographics which all of us have talked to death in terms of the theme playing out. So I think all the necessary and sufficient conditions are in place why all these themes should continue to do well in the foreseeable future.
Right, Shiv, good afternoon. Mansi this side. While the Indian markets and their performance were mixed if we compare it with the other Asian markets. And when I say mix, the tilt is towards being rational and mature. Having said so, there's a lot of global developments which are happening. You see the tariff scenarios, the contingent uncertainties. How do you see the markets placed and what's your view on the tariff front?
So look, the way one has to look uh, for the tariffs is the fact that India's share in the global exports is not very significant, and in the US as well, right? So, in that sense, it comes as a blessing in disguise for India that, yes, there may be certain pockets which may or may not get impacted depending on how the tariff equations ultimately play out. But fortunately for us, this is not going to be a big headwind when we think from an economic perspective. That's number one. Number two, even within that framework, also, if you look at, and you were just talking about, uh, the tariff agreement with Japan that happened yesterday. So I think slowly but surely we are seeing each country by country sort of reaching a certain kind of an agreement when it comes to the tariffs. And I think India is not going to be any different. Of course, these are things which are negotiations. They can be tough negotiations at certain point of time, and they may take their own sweet time to sort of come to a conclusion. But I don't really think that we need to be really worried about a significant adverse impact of any tariff outcomes from an India perspective.
Ankur, this side, I want to understand from you, how do you see markets in the lens of valuation? There has been a lot of debate whether or not India is expensive. And is it actually like a Mumbai reality where everybody says it's expensive but still wants it?
Of putting it with the Mumbai reality. But yes, see, the fact is that when we look at an absolute valuation, and people often talk about P as a valuation metrics for want of a probably better metrics. Uh, the basic thing is that we can't look at this particular metrics in isolation, right? We have to look at in relation to, let's say, something like an ROE, ROC, right? Finally, because that's the measure of the capital efficiency. That if I'm putting $100, what's the kind of capital efficiency I'm getting in a market like India compared to any other market? That's number one. Number two, also, one needs to look at a lot of the other concomitant aspects, like how easy or difficult it is to sort of take money out of this particular market. If you think about and something that a lot of people have discussed over last 12 to 18 month kind of a time frame is that there is a lot of selling by the private equity investors in the secondary market, correct? But that should also be looked up as a positive that, there are, it's a confidence to the investors that, look, I can invest in India, I can make money out of India, and then I can sell and exit as well, right? So it's not just about a paper money, it's a money which I can cash in. So I think if you think about all these concomitant aspects and variables, then you would realize that, why India commands this kind of a premium in valuations, and why these valuations can sustain over a long period of time.
Shiv, since you are with us, we also would like to know your cash on the books. How much cash are you sitting on, and what's the AMC principle as far as being fully invested is concerned, or holding on cash to a certain extent is concerned?
So we are sitting around 4 to 5% cash, depending on, which particular fund that we are looking at. And of course, as a risk metrics, we have our own internal limits till, which level we can go up to in terms of cash. And of course, within those limits, it's the market sentiments and our outlook on the market which determines what's the kind of cash levels that we keep.
One last question, talking about your strategy and style of investing. While we deep dive, it says that you're in search of companies with superior and sustainable earnings growth with strong management at reasonable valuations. Now, having said that, for our viewers' interest, if you can help us draw a strategy while they are creating a long-term portfolio.
So I think particularly from an investor's perspective who are putting money into the mutual funds, and this is something that we have discussed many number of times in the past. The most important thing is to understand what is the investment objective of that particular investor, and hence what is the time horizon. Any investment decision has to be an outcome based on these parameters in terms of what is the need and what is my time horizon. And of course, like what we keep saying, that if one is looking at mid cap and small cap space or any other sector specific themes, the minimum time horizon that an investor should have is somewhere around 3 to 5 years kind of a time frame, because that's the time frame within which, number one, when we think about small and mid cap companies, they have that kind of a time to sort of actually scale up their businesses. And also, typically 5 years will be a period where you will have a one complete economic cycle. So unfortunately, even if somebody's entry into the market is, let's say, at a just at the beginning of a bad economic cycle, because we can't predict them very well, but if you give yourself time, I'm sure, things will even out over a period of time. So that's the reason why we typically talk about a horizon of 3 to 5 years, preferably 5 rather than a 3-year kind of a time horizon. And that's what the investor should focus on. But the most important thing has to be, what is my investment objective, and hence what is my time horizon. That should determine where the investor is putting their money.
All right, thank you so much, Mr. Chanani, for sharing that advice and also spelling out that yes, we are at premium, but still people are investing in India and making money. It is India growth story and rising with India story. But moving on, Prateek,